Bitcoin is trading back above $85,000, even among all of the market uncertainty. Are Trump's tariffs actually supercharging Bitcoin? We're going to talk about that and everything in the macro because it's Macro Monday. Today, we've got Mike McGlone, Dave Weisberger, and replacing James Lavish, Noel Atchison. This is going to be an amazing show. Can't wait to get started. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit that like button. Going to bring on the amazing Macro Monday panel. We've got Mike, Dave, and Noel. Good morning, everybody. Mike, let's start at the morning meeting and we'll go from there.
Yeah, not much different from what we spoke about in the past. Our Estelle, who's our economist who works with Anna Wong, pointed out the tariff decline or pullback a little bit from Trump will make the average tariff on China maybe from 130 down to 100%. The total effective average tariffs are still about 21%, about the highest in 100 a year. He expects retail sales to jump a little bit on front running and sees a tilt towards recession. Jillian Wolf stood in for Gina Martin Adams and pointed out the key thing from our whole equity team is something I've never seen from them, and I've known that team for 8 years. They keep pointing out the risks of recession in the U.S. The U.S. Equity markets are still very expensive. The statistics she used was, as far as earnings, there was about a 1.6 multiple at the beginning of the year. The U.S. was the highest ever, now about 1.5 against the rest of the world. Still very expensive, and sees a risk for a recession, another 20% down, and looking at a level around 4,000, the S&P 500. Is kind of the key things. And then from our chief FX strategist, Audrey Childfreeman, just pointing out the acceleration of de-dollarization, which to me tilts over to part of the reason gold's on a record run and part of what's supporting Bitcoin.
Mike, with gold on that record run, obviously seeming like it could be a little toppy, but has been on a record run, and seeing the yields do what they've done in all of this uncertainty, we have this rumor that Japan and China are likely selling U.S. treasuries and buying gold. Do you view it that way? Do you think that there's an active attempt to unload U.S. debt?
So Ira pointed out what key happens is it's typically, yes, if central banks typically hold the shorter duration securities, typically 5 years on in. And he said, yeah, there's some of that happening. As far as buying gold, didn't really talk too much about that, but we've seen central banks accumulating gold for years now. Certainly 2022, since the Russians' invasion of Ukraine. The key thing he pointed out is really mostly individual investors, private investors hold the long end of the curve. And long end was really the key story last week. But the key thing that was noted from all our strategies is when you have riskless rates going up, that's a bad sign for equities, typically, because there's risk, and which is the bigger problem. But there's some of that. I think that's what we're seeing. Even Ira pointed out just basis unwind a little bit in treasuries, but not a lot. I mean, it's massive positions going on. It's one of the key things that surprised me this year with crude oil collapsing, that bond yields have gone up. But I look at it on a, I'm just tilting over to the 1 year basis, that U.S. Treasury long bond. It's unchanged with coupons. It's down a little bit this year. Actually, it's unchanged this year too. That's the 20+ index, TLT with the coupon. And the key thing I like to tilt over is gold's up 20% and Bitcoin's down 10%, about the same as S&P 500. So the key things that's happening in that treasury market is, key thing remember is most of us who've traded treasury for a long time, when yields start picking up with distress, that's a bad sign for all risk assets, most notably U.S. equities.
Noel, what do you make of the action with interest rates, and particularly the 10 and 30 year, that have continued to go up even with all of this macro uncertainty? Obviously, many saying that the reason that we were doing all of this was so that we could get interest rates down and refinance the debt at lower rates. Worked for about 3 or 4 days and then skyrocketed back up to much higher levels than even before all of this tariff nonsense began.
Yeah, for a few days we were in beautiful alignment. Everything seemed to be going the direction the administration wanted it to. But then things started to get confusing as Trump started to go off script, and divisions emerged even within his team as to what the purpose of the tariffs was, let alone the strategy. And that's when the risk premium crept back in. That's when the de-dollarization that Mike mentioned started rearing its ugly head. And I think what we're seeing now is, yes, risk, basically an exit from US assets more broadly, not just from overseas holders, although that is considerable, especially given interesting things happening elsewhere, but also from domestic holders rotating out of what they see as a likely less liquid market, therefore higher risk, into some of the other alternatives that they have that are as high risk now. This is the underlying thing that we have not seen since the pandemic. The world's safe asset act like a risk asset. And I think that is the biggest confidence shake here. It's not so much the flip-flopping of communication that we're getting on whether there'll be tariffs or not. It's the world's safe asset is not behaving like one. And so, as Mike said, where do you go? You go to gold. And as things start to become a little bit more settled, probably also Bitcoin.
But I mean, to that end, you mentioned obviously the tariff flip-flopping. It's pretty wild. Trump warns tariffs coming for electronics after reprieve. It's hard to even summarize how back and forth we've gone, right? Obviously, we had the fully reciprocal tariffs. Then we had basically tariffs eliminated on the electronics and all of these things, and people going, well, yeah, we need those things. But now China's in the lead because they've reciprocated and they haven't given any exemptions. Then we basically have Lutnick saying these are coming back on, Trump saying they're coming back on, questions about whether semiconductors actually are being tariffed or not. It's all over the place every single day. At some point, I could see the 40 chess argument. Now it just feels like they're panicking at every decision.
Yeah, the 40 chess would have been a lovely argument. And I personally clung to that in the beginning because, if anyone's read the Moran paper, it kind of does make sense. There's flaws, but it makes sense. And that's what we were hoping we would get, a gradual adjustment that would help the global economy reset onshore production into the United States, bring the long-term yield down. That was the goal. And it's doable in as much as you can thread a needle while riding on a motorcycle in a snowstorm, but at least there was potential. What Trump has done since he actually launched the reciprocal tariffs is throw Moran's paper in the bin. Everything that Moran recommended, Trump is pretty much doing the opposite. And this has confused not only investors, not only watchers like us, but also Trump's team himself. I don't know if any of you saw or listened to the All-In debate. I think the episode dropped on Friday between Larry Summers and David Sachs. It got really heated at some stages. And of course, Larry is attacking the strategy. David Sachs is defending it. And while David Sachs did land some good blows, in the end, Larry Summers highlighted how there just isn't a strategy.
Dave, your turn. I do want to talk. I'll let you address it, and then I do want to pivot to Bitcoin because we are trading around 85,000, higher than when any of this tariff nonsense obviously began. We know that Bitcoin has remained relatively strong, even with that temporary dip, and stocks certainly still not back to the levels before all of this.
When you get turbulence, one of the first things that you learn when you're trading is betas and correlations change. And we have a market that is extremely dominated in the short end by momentum traders. Listen or read Cliff Asness's report, quarterlies or whatever, and AQR is a value investor and over the long run does very well. But the one thing that is there are two constant laments that he makes. One of them is, people chasing momentum and how, that impacts the strategy. And the other, of course, is private versus public, where private doesn't have to get mark to market when we go through all this volatility. That's off topic. Why am I saying this? Well, take a deep breath and take a step back. First of all, the gold, Mike's thing on gold versus Bitcoin. I mean, it's like saying that whatever, apples and oranges doesn't go far enough. I can think of analogies that the two, it's not related right now. What's going on with gold is exceedingly obvious. There clearly are or have been some central banks that have been buying more gold. And as a result, what happens? It gets a bit of momentum. What happens when anything gets momentum in this particular market? Repeat after me: momentum chasers trade it. And so, yes, you're right. I don't know where the peak is, but gold has still doing its job of matching purchasing power parity. And as inflation decelerates, gold, people will look around, central banks will stop, and the momentum will leave, and gold will revert a little bit. But it's still fairly valued right here. It's not overpriced. So could we see a run to 4,000 and then a pullback? Yes, absolutely we could, because momentum is momentum. It's going to overshoot. So that's gold. Understand, there is zero probability, and I mean zero probability, that gold is going to reclaim its place as a denominator for financial assets. Not going to happen. Okay. Now, it's not going to happen for a lot of reasons, not the least of which is we don't know where gold really is. We haven't seen audits. There's definitely rampant fraud underneath in the gold market in terms of lead painted, bars. I mean, we know it's true. We just don't know how much. And it's one of those things that no one wants to open up that kimono and look, which is why we haven't seen a Fort Knox audit, which is why we've seen the gold reshoring that we did. There's all sorts of macro currents, but gold just is no longer suitable, nor does anybody want to. By the way, I was a gold bug for 20 years. So this is coming from somebody who understands that sound money will be a good thing. So gold is going to trade as gold's going to trade. Bitcoin right now is still trading like a sort of risk asset. And I say sort of because it's in the process of breaking through that. And you can see it that way. The notion that Bitcoin's beta will persist to the downside, if it hasn't been lost on people now, then I just don't, there's just no hope for you. Bitcoin's correlation to stocks at best has been tenuous. It's been up and down. Its first move is always in the direction of NASDAQ, not really the S&P. That is true. And then it ceases when supply and demand factors overwhelm it. So we've seen consistent buying from smart money. And I mean the smartest money. We're talking about the most informed, whether it's the White House, whether it's, whether it's what Larry Fink has been saying, whether it's whoever. I mean, we've seen smart money buying, and we've seen crypto people who, I hate to say it, but that's the dumb money. The people who consistently sell Bitcoin to rotate into altcoins every time there's a bull market, they think, and they get carried away and they end up losing their Satoshis to the smart money. That's what we've been seeing for months now. And, that's going to go on for a little while. I mean, look, people want to chase beta, and the real beta is alts to Bitcoin. That beta is very, very real. Now, do they have different mechanisms? Are they different value propositions? Yes, absolutely. But that beta is very, very real. And so, when I look up and down, what I see, like this morning, I see Solana is up on the back of it. I see XRP, which has been correlated to Bitcoin ridiculously highly. When you consider that, it's kind of funny because, they obviously, their use cases, that there's no correlation, but the correlation to Bitcoin and alts is very, very high. So I look at it that way. Now, as far as the macro goes, what you're seeing is an internecine fight within the administration playing out in the public. And you see a president saying, this might work out to my advantage, so I'm going to let the boys fight. In fact, Catherine Levitt even used the expression, boys will be boys, to describe Elon Musk calling Peter Navarro dumb as a box of bricks. And, this isn't 4D chess. This is, listen, we want to reform our manufacturing. We need to figure out what's going on. We want to make informed decisions to make this happen. I want it to happen yesterday, but the world doesn't work like that. And anyone who's ever been a CEO or run a corporation or run a large team knows that you don't always have unanimity among your own reports, and you have a goal in mind and you kind of want to see it play out. And what you're seeing is in real time, decision making by confrontation and argumentation. And unfortunately, to the world, that looks like total instability. Sure, but this too shall pass. You might want to remember, Mike, you could pull up the chart. What happened in February of 2018? Trump won. Tariff trade war with China fears. Market takes a dump. What did he do? Backed off, blah, blah, blah. But some of it stayed. And Biden even kept those tariffs.
Yeah, it stayed through Biden.
Recovered. Right. So, we've seen this before. What is going to happen here, in my opinion, is we're going to unfortunately have to back down faster than we'd want to. Why? Because we don't have rare earth refining capabilities. I think you're going to see, and you should see, a moon launch kind of deal, into AI and rare earth refining, because we can't get our own supply chain under control without the ability to process and refine rare earths. It's not just getting the minerals, it's the refining capabilities. The same thing you're going to see in chips, like Taiwan Semi announced that huge plant. I would imagine you're going to see them reach out to every other chip manufacturer to do the same. That's what has to happen. And that's what will happen. And the market's starting to sniff that out. So why is the market not taking a dump this morning after Howard Lutnick came on and effectively, my favorite meme of the weekend, I don't know, did everyone see it with the Seinfeld, instead of Newman, it was Lutnick, in big letters across it. Howard comes out and basically says, listen, we're not changing our strategy. Yeah, we're not. But we may have to delay things a bit because there are things that need to happen, and you don't build factories overnight, particularly in America where you have 18-month environmental impact statements before you even have a chance to build anything. So this administration is figuring out what it can do and what it can't do in the short run. And as this plays out, markets are going to lurch up and down. Last point, everyone's freaking out about bond yields. We had 5% bond yields a year and a half ago. We're under 4.5% now. It's not where they want it to be. It's not below 4%, but why should it be? Below 4% is we're going to create a deep recession, but you're going to go to bonds as a safety valve. But it doesn't always work that way. And so if you create a deep recession and people stop saying, well, I don't want to buy U.S. financial assets in this recession, that I don't need to hold U.S. dollars, maybe I'm just going to sell all U.S. financial assets. And I think they're starting to realize that is a realistic thing. So I think you're going to see that talk get damped down quite a bit.
But Dave, and I know Mike's going to want to respond to that, but it's not really about the absolute number. It's the directionality of it, considering the situation.
Oh, there's no doubt that the up and down volatility making the U.S. bond trade like a cryptocurrency is ludicrous. And it has happened, but look, it's a direct result of our two top, actually, basically the four top guys in the administration on economic policy, effectively having a food fight playing out in national TV and national media, right? You got Musk and Besant, who, obviously that's the team I'm on. We all understand that. I think they are the ones you want to be in charge of the economy. And you have Lutnick and Navarro. And they're fighting. And there's no question that they're fighting. And Trump is basically saying, okay, let the best arguments win. Let's see how this goes. And that's what's going on. Eventually, we're going to end up with a coherent policy. It's like, as Mike puts it.
I'll give you another take. Tim Cook called the White House and said, leave my iPhones alone, dude. And we got policy.
Yeah, it's not that simple because, you got Elon already in the White House. And while he has a huge competitive advantage over all the other car companies in America insofar as Tesla is 70% U.S. components. General Motors is somewhere in the neighborhood of 55 to 60%, et cetera, and all the others are lower than that. But Musk has 30% of his components that come from overseas. And I'm sure he said, listen, we're going to drive the cost of all of our costs up. It'll help my company relatively, but still really bad idea. And so he said it too. So you don't even have to wait for Tim Cook. But I'm sure it wasn't just Tim Cook. I'm sure a lot of the executives.
I was using Tim Cook as my proxy for big tech and anyone who's
they explained to them
triple in price.
Well, but they explained to them that we literally there are probably, I don't know, there's sensors, there's this. There are probably factories in China and in overseas that we just don't have here, right? We need to repurpose, or we need to, more to the point, we need to encourage companies to invest in building those factories here when we don't necessarily have the skilled labor. And people always talk about the cheapness of the labor in China. That's not what you heard this weekend. You heard productivity per dollar, not cheapness. Right. Yeah. That's why you can't just move from China to, I don't want to insult another country, but to another country with quite low cost labor, because the labor there is also skilled. And, they've been producing 3 to 4 times the STEM graduates as us for years now. Don't expect that it's all about cost of labor. That's what everyone always thinks.
Yeah.
But that's the last war. That it used to be true. It's not true anymore. And so this is complicated stuff, Scott, and it's going to play out over a long period of time.
Point, though. No, and then we gotta go to Mike and Noel. But I mean, if it's complicated stuff, maybe don't just say everybody. You get to go full Oprah and say you get a tariff, you get a tariff, you get a tariff, you get a tariff. It makes a lot of sense to tariff things that you don't need, and maybe to consider, the things that you do and not end up backtracking and rewinding all of your decisions when you realize that you're not going to have the things you need to run your country. Mike, what's your take?
So let's talk about the elephants in the room. First of all, the lesson I learned in the trading pits is, yes, everybody in the world wants free trade as long as they can run surpluses with the U.S. The lesson I learned doing my MBA at night is, free trade is great for everyone. Trump is just, the fact is, he's trying to rebalance a global dependence on exporting to the U.S. that's been in place for 80 years. And it's just kind of entertaining to watch those of us who've had many independents when he shut them off. And that's what he's doing. Now, right or wrong, all that matters is this is almost a guaranteed global recession. The reason I say that, well, nothing's guaranteed, is because these were the signs that we were pointing out 2 years ago. Remember that U.S. unemployment rate never bottomed that low without going to 6%. It's just on its way there now. The whole, gold beating everything, particularly crude oil and industrial metals and all commodities, was a sign that we've had in the past that we're going to that global recession. But the elephant in the room is what's happening now. It's a backup in U.S. stock market. So I like to say, for all crypto people, if you're bullish anything other than just certainly Bitcoin or just a crypto space, you need the U.S. stock market to go up. So let's look at facts on the year. On the year, just 1 year, and I know Dave's going to point out time, but this year is a paradigm shift. We have a very unique president. He's changed the world order, and gold's up 20%. Bitcoin's down 10%. S&P 500 is down about 10%. Do you expect that to reverse? I don't. I expect S&P 500 to drop a minimum a third from the peak. That's just normal in a recession. The key thing that happened was when the Fed cut rates and added fuel to the added alcohol to that punch bowl, it punched up the S&P 500 an extra 1,000 points it shouldn't have. Now it's going to just take it back. We're doing that now. We're heading towards that recession. And the key thing, the most significant chart I like, is one thing that Gina turned me on to years ago, is you take that S&P 500, divide by the MSCI ex-US index, you go back to 1970. It's the highest ever, but it's been a straight line up. It's the lessons of technical analysis is these things always revert. It's just a question when. Now we have a trigger to do that. If you overlay that same chart with Bitcoin gold, it's the same thing, but they're all starting to roll over. All we've done is gone back to the trend line. We haven't broken down. We're going to do that. It's a question of when. It always does. I think it's happening this year. That's my point, is what you've seen on the screen so far is just a little bit of reversion of people are just learning, okay, the passive complacency of low volatility in the U.S. stock market going up on the back of massive fiscal deficit spending and all the stimulus is over. And we haven't even seen the breakdown yet. We've just seen a recovery to the trend. That's my point. This is the next big trade. That's why I still stick with, at some point, it's just a matter of time. Crude oil gets to $40 a barrel. Gold probably $4,000 an ounce. Go ahead.
Below 60. That's that's
finally.
When,
it was as a headline I enjoyed seeing today. It's just a simplistic thing you learn in the trading pits, and I love how Dave says the smartest people in the room. I remember learning that trading pits. They're on the phones with me, the smartest people in the room. They can be dead wrong sometimes in certain things, partly because they get stuck in their ways. And here's the key thing I enjoyed seeing the headline this morning. Goldman Sachs warns of oil prices, large surpluses through 2026. Now, I pointed that in 2022. It's going to come. I was early, stopped out if I was wrong. It's just the power of when markets should go up too much, she goes down to offset that. That's what's happening in the U.S. stock market right now, and it's got a very good reason to do that. The rest of the world's trying to sell rallies, and they should. The dollar, the stock market, all linked, and when you get to the highest ever versus the rest of the world, the highest in 100 years versus GDP, the stock market is the economy. There's only two examples in history, 1929 in this country, 1989 in Japan, and I'm open to anybody giving me better suggestions. So this is what we're doing right now. The key thing to remember is bear markets have the most severe short covering rallies. We're doing that now, and they make you believe it's over. They may give you hopium, and that's my point, is the whole crypto space is completely dependent on that stock market going up and it's going down. That's why I point out on a one-year basis, the Bloomberg Galaxy Crypto Index is down about 30%. The Bloomberg Precious Metals Index is up about 30%. If you expect that to narrow, sure, in the short term, but I expect that trend to just continue to widen.
The only thing I would say, Mike, is since the tariff announcement, as we mentioned, Bitcoin is higher than when it happened and stocks are still lower. So there has been some divergent strength.
it completely admitted there's been a significant divergent strength, and the key thing I fully expect is Bitcoin dominance will continue to increase. It's a bull market. That's been a good sign. Now, if it can tilt me over to getting bullish Bitcoin, I don't know what's going to be. So I'll point out one little thing that I have the benefit of working with some really smart people, as Dave always points out. The one thing is we have this thing called BECO Economic Models. My colleague works in the same office, Josh Daniel, and a bunch of people a lot smarter than with me, numerous PhDs, created a fair value model that's almost exactly the Bitcoin gold ratio. It's broken down below that low from last year, around 17. Bitcoin gold right now is around 27. You know, that's been the key thing I pointed out. When it peaked at 40, I'll stick with that trend continuing to go lower. The ounces of gold to Bitcoin is probably going to, at 27 now, just based on the model. They don't use any other things that I don't even understand most of it, but it's been spot on for 4 or 5 years. It's showing the models more going to 17. So I see the fundamental, the technical, and the model all pointing lower. Maybe we have something different, but then the bottom line for me is when I see my colleagues, Gina Martin Adams, pointing out 20% corrections in the stock market, should beware.
I'd love to respond, but I want Noel to have a chance.
Oh, you are a sweetheart, Dave. Thank you. Yeah, I mean, so much to pull on when it comes to Bitcoin versus gold. The narratives are, I think, shifting. You saw the headline just from last week about Germany thinking about repatriating the gold that it holds under the New York Fed. Well, why does it need to do that? I mean, custody and transport of gold is a problem, and central banks around the world who have been custodying their gold in the United States or in Europe are rethinking that whole thing. So when there is, for the very first time, an alternative, a simpler, more reliable, more transparent, more verifiable alternative on the scene. That said, I do totally agree that Bitcoin for now is going to continue to trade like a risk asset, and it is sometimes going to trade like a safe haven. I'm of the view that that will always be the case. However, Bitcoin's dual narrative gives it a higher floor because there is always a narrative to bring in buyers for whatever dip reason you happen to have on the table that particular week. But speaking of elephants in the room, the one that I'm focusing on, stepping back a bit here, is the political risk. There are legal challenges to what Trump is doing. The IEEPA has never before been used for broad tariff policy. It has never before been used to execute a grand economic plan. Its intention was to respond to actual emergencies, and whether a trade imbalance can be considered a national emergency, that is obviously, there's some debate to be had there. Now, there is not yet much opposition in Congress. There are some lawsuits that will probably find their way all the way to the Supreme Court, and I don't know who knows what's going to happen there. It's going to take some time. In Congress, we're starting to see signs of resistance. 7 Republicans have co-signed a bill to push back on Trump's tariff plan because of its illegality, really. He doesn't really have the authority to do this. And I think we will see that accelerate as the midterms approach, as the economic pain starts to hit, especially in areas where Trump has a strong voter base, where the incumbents are afraid of losing their seats. And it's going to be especially contentious in the independent states, the swing states. And China's strategy here is intelligent. They're just going to be biding their time. They're going to be cutting off imports of produce, and especially where it's going to hurt U.S. farmers, U.S. producers, Trump's base the most.
They did that last time. Yeah, they did that from
exactly.
2018 to 2020, and it ended up $30 billion in subsidies almost for our farmers.
And the stakes are higher this time, partly because of the boldness of Trump's plan, but also because if the Democrats get back the House and the Senate at the midterms, which, if indeed there's economic pain, looks more likely, if that happens, then Trump is looking at impeachment proceedings yet again. So obviously all involved would like to head this off if possible. So I think the political pushback will be louder and sooner. And that adds to the uncertainty in the market. We can adapt to tariffs. And people can get their heads around it. Nations can rewire their supply chains. What people can't adapt to is the uncertainty. Why build a factory in the US if in 2 years it turns out you didn't need to?
Yeah, that makes a lot of sense. Go ahead, Dave.
Yeah, well, a couple things. First, the one thing that always drives me nuts about political watchers in the US is they get their cycles wrong. I'll always default to remembering this Saturday Night Live skit back when a year and a half before Clinton won, basically showing all the Democrats basically saying they don't want to run because there was no chance they could run. Politics is next year. This year is not politics. This year is about, what will actually happen. Now, the point about the lawsuits and the bills in Congress, that's going to be a convenient excuse, in my opinion, to pull back and normalize the policies. There's going to be all sorts of, the thing you have to understand about Washington is all sorts of stuff. Now, look, I was in DC last week. I was at a fairly high level conference. People, not the CEOs, but it's called NOIP, and it's all the people who are running divisions, mostly out through Wall Street. It was astounding how calm the audience was, the room was. Everyone is like, yeah, there's a lot of noise. It'll work out. And all I can say on the policy side, I suspect we will end up with some version of normalcy, and we will see more announcements like we saw this morning from NVIDIA. So NVIDIA announces this morning that they're going to be making, their chips in the United States. They have their first 100%, supercomputer being made here. You're going to see more and more of those. They'll get touted. You will look at that, and you're going to look back at this, and you're okay, well, it was handled clumsily, but we end up in the right place. I mean, it's sort of, I would view this as Trump's version of Afghanistan, only nobody's died, right? In terms of the stupidity of leaving $85 billion of equipment in Afghanistan, 13 people dying because they didn't respond to threats. We didn't use McGlone Air Force Base. No one, when it came to the election, even thought about that. Guess what? It was the same timing in the term. And by the way, in terms of a reason to not have a commander in chief, that is a far bigger reason, right? If you think about it in terms of economic policy, I mean, all people care about is the price of groceries, what's going on, and all of that, I think, will play itself out. That's kind of the way I look at this. And honestly, that's how the market is looking at it. Now, as far as Mike is concerned about the stock market, I will say this, and I want this to be clear to people who think I'm a permabull. I am not. This feels very much to me like 2000, where we had a March sell-off. It was a brutal one, and a full recovery by June. It kind of coasted into the summer, and the fall was ugly. We could have a very ugly fall. There is no doubt about that in the stock market. There's no doubt, right? It is extended. There's lots of reasons to think that. The only big difference between now and 2000, and by the way, there's similarities there too, is pre-2000 because of fears over Y2K, and I know that seems so quaint to people. All I remember is my one of my daughter was being born, and my mother had to fly out. So my wife labor on December 31st. My mother was one of 4 people on a jumbo jet. 4 passengers. There were
people thought they were
there were 8 flight attendants and 4 passengers early in the day on December 31st when she came out. So, people were genuinely afraid. The Fed pumped a lot of money in the economy. It's almost quaint how little it was compared to the money that's got pumped in during the pandemic. But we did have a monetary bump, and that did fuel a stock market rally, and all of that happened. But take that aside for a second. If you look at the denominator, i.e. M2 in circulation, and do a chart of the S&P correlated to M2, one of my favorite charts, and you take that denominator out, or do the same thing with oil. Oil, it looks weird, but I would make the argument that 60 today is 40 on your chart, Mike, because 60 is a point. It's below the cost of production. We've had inflation.
50 is the cost of production.
What? 60 is that's right.
Bloomberg New Energy Finance said the cost of production is around 50. They're smarter 50. Than I am.
Okay, so 50. So all I will say is that's actually interesting. That's because of technology. It's fascinating.
Exactly. Drilling technology.
Drilling technology is better. So drilling technology is offsetting partially the M2 when it comes to oil. Look, there's no doubt that we're going to fall in a recession. Cost of oil will fall below the cost of production. There's no doubt.
We're already heading that way. That's my point. We're heading that way.
You and I don't disagree. And the stock market.
That's no fun, Dave. I think our viewers and listeners want us to disagree. Come on.
No. That's okay. But the point is, though, oil dropping is a huge help in terms of inflation, right?
Exactly.
There's no doubt about that. So if they take the tariffs off the table, you have oil dropping, you have recession. do you not? What do you think in terms of liquidity? I mean, it is clearly likely to be brought back in, because the last thing the U.S. government can afford is budget deficits increasing, which will absolutely happen if taxation decreases. And so, all these things are interrelated, and everyone has to understand it. And so when we look at the headline, yeah, altcoins are going to move with NASDAQ. Absolutely. They will almost certainly have higher beta. I think the downside beta is kind of played out already. It's already had a lot of downside beta, but yeah, look, there's the coins out there. You and I both agree should be zero. Bitcoin, the real question is the narrative changing, as Noel was kind of hinting? And so I think the answer is yes. And so that's really changing. The issue.
ETFs are selling 3 months in a row now. $5 billion. And guess what? In the last 3 months, we've had 20 billion of inflows in gold. You expect that to shift? I think it's just getting started. U.S. stock market is only down 10%. It's going to drop another 20%.
I feel like Tom Lee. I'm glad that more people agree with you than agree with me, because that's how bull markets go. But I do believe that Bitcoin is going to be in a different scenario, because I do think liquidity is there, and it's still not even close. It's trading at a 95% discount to where its adherents believe its value is going to be.
Some people say it's
saying here, Mike. Gold and bonds, safe haven, allure, maybe fading with Bitcoin emergence. There's a few things here that I want to ask you about, because these are headlines across the board, Mike. To that end,
from what
Euro's emerging as alternative Bloomberg? Safe haven, along with bunds. So we're seeing obviously yields rising in other places, and maybe the appeal of treasuries diminishing. And of course, this sounds like you, Ray Dalio, sounds the alarm on global systemic risk, but Bitcoin remains resilient. Are we seeing an actual move on what's considered a safe haven asset at this point? Or is it just going to be gold?
It's an oxymoron to say it's a safe haven when it trades 3 times the volatility of beta and gold. I mean, I could agree with Dave. I wrote about it years ago. It was going that way. But what flipped me? It reached a major milestone. It reached $100,000. And the things I wrote about for years is once we had widely disseminated ETFs and the mainstream's in the space, it's over. That means it's no longer the people who are the insiders who got it from the very beginning. So it's not ad nauseum talk about Bitcoin. The Bloomberg Galaxy Crypto Index, of which 1/3 is Bitcoin, is down 1/3. Its 200-day moving average is rolling over. It usually leads S&P 500. That 200-day moving average has just gotten started. People can play with this as much as they want. I'm just pointing out this highly volatile risk asset, and the key difference with Bitcoin and everything else in the world, it does have millions of dependents, and it does have a much higher correlation to virtually all those dependents, either way you look at it, than gold has its 3. So I'm just pointing out that's rolling over. The U.S. stock market's just starting to roll over. You're going to get sharp short covering rallies. You're going to get hopium in bear markets. That's the stage we're in right now. How much higher it goes, I don't know, because it can go very high. But the point is, my whole equity team thinks the stock market's got another 20%. Okay, I'm going with that. The model I see says Bitcoin gold should drop another 1/3 from where it is now. I'm going with that until proven wrong. Just show me good reason to be wrong. And I'm pointing out 3 months now, all those ETF buyers have started flipping to sell. Not all of them flipping to sellers. Why? This has been a minor correction in what's been one of the biggest rallies in history, certainly U.S. stocks versus the rest of the world. So I have to point out the alpha in the world remains the U.S. stock market. When we start taking more money from the system, which is the lesson I learned in the trading pits. When you hear a bad number, you just see all sellers drop and markets drop a handle. You just take out what you destroy wealth. We're just starting to do that. The key thing I want to point out is just tilt over to the macros. We have the macro to do that with the new Trump administration. But then I do want to point out things that some of us who've seen in the past, that one of the biggest bond bull markets in the last 20 years has been CGBs, Chinese government bonds, 1.66 right now. In 1995, I was trading JGBs. I've seen this before. Deflationary forces from the second largest economy at the time tilt over. Took a little while. Now it's tilting over from China. And the key thing I'll push back on Noel is China is not China. It's one human being. It's the most autocratic leadership since Mao. There is no natural check and balances. The key thing about this country is if this whole experiment from Trump doesn't work out, midterms will push back on it, probably be a negative, but energy prices will be a lot lower. By the time we get the next election, it flips off and we go back to the way we were. If he succeeds, which I kind of think he will, this will change the world forever. I mean, it's 80 years of shifting. That's my point is, that's the thing to remember about our current administration. They are all very wealthy business sharks, and they are thinking about legacy now. Just see it from, they're thinking about how is the future going to judge us? We have one chance to do it. They're doing it hard and fast. They're pulling back a little bit, but from the future, we're going to look back in this and things, like I said, 30 years ago in a trading pitch, everybody wants free trade. As long as they can run surpluses to the U.S., we're shutting off the world's dependence to be able to export to the U.S. This is a global recession kicking in. The point I like to make is commodities were showing that well before Trump was elected.
Yeah, I totally agree with the assessment that a global reshift was needed. I was so excited when it looked like they were actually going to be tackling that. My concern is that the plan went off the rails, and without a plan, there isn't trust, and without trust, they're simply not going to get the yields down. And this is existential. If they don't get the yields down, what does that do to the budget deficit? What does that do to the world's safe asset? What is interesting is even Stephen Moran, in the paper that I referred to earlier, he said that he recognizes that market volatility is going to be a consequence, and he expects gold and cryptocurrencies to do well in that kind of environment. When it comes to Xi being one man, that is his strength. He doesn't have politics to worry about. He doesn't have midterms. He doesn't even really care about public opinion. And the Chinese have a lot more experience in weathering hard times than do Americans, who go to the polls every 2 years practically. So that does mean that Trump is expecting China to blink, and Besant is expecting China to blink. Everyone is saying China will blink. And what if China doesn't blink? They don't seem to have a plan for that other than walk back. The thing is, we know that Trump cares a lot about saving face, and so does President Xi. So it's going to come down to a battle of wills, and what's at stake is arguably huge.
I mean, I just want to push back on one point that just drives me absolutely, well, there's 2 points that drive me absolutely crazy. One, this dependence notion of millions of dependents. I mean, yeah, I mean, to the extent that there are lots of assets in the crypto world which will follow the price of Bitcoin. That is true. They are insubstantial and getting more insubstantial in terms of the money flows into Bitcoin, because the percentage of price setting coming from the crypto universe has been steadily decreasing over the last year in favor of people investing from outside the crypto universe. And so understand that if anything, that relationship has notably decreased, will continue to notably decrease, and probably will eventually tail out. It is not the other way around. And let's first week of introductory logic, they teach you about correlation versus causation and where it comes from, and those two things are there. So I'm just tired of that argument. It's silly. It's no different than saying, and maybe you probably think this is true, that Nvidia's price is going to move based upon all these AI companies that are now having to do down rounds and secondary rounds because they were overvalued. I mean, just last week we saw yet another multi-billion-dollar valuation for a dude with an idea, didn't even have a PowerPoint yet. Right. You know, it's like, look, we've seen this story before. And when you get a dude with an idea in AI being able to raise at a multi-billion-dollar valuation, is no different than what we saw with pets.com, although that was actually a public company, you know, in the internet bubble. You know, yes, that is true. But to say that that's why Nvidia is going to drop, I don't think that's a really good argument. And I think that Nvidia may very well drop if you think it's overvalued, but it won't because of what's going on quote dependence. But the real issue is something I've said on this program for 2.5 years. I will continue to say it until such a time as Bitcoin is at least 50% of the price of gold. Bitcoin trades like an option. It is not stable where it is today. Just think about what that means. It is not at a stable price. Assets reach some, relative to everything else, reach some form of equilibrium where you have a balance of buyers and sellers, and it's where it's supposed to be. It takes a long time for that to happen. Bitcoin isn't even remotely close. Gold, very, very stable relationship to purchasing power parity. Yes, it can move 20% here or there, but it's been pretty damn close. And sure, purchasing power parity changes over time because of the technology. Shirts are a hell of a lot cheaper than they used to be in 100 years ago in terms of part of a budget. But you can look at the overall and see the same thing. Bitcoin is trading at 95% discount to its notion of purchasing power parity. Now, will it get there? No, it may fail. It may reach stasis at a different level. But effectively, what you're calling for when you make your 10,000 calls is Bitcoin failing, because it would not be stasis at 10,000.
No,
it's calling
just
for failure.
Gold has had plenty of backups. It didn't fail. The S&P 500 had two, and I've lived through with real money, 50% backups in the last few years. It didn't fail. It's not failing. You made that statement, not me. Let's point out the facts. I pointed out when Bitcoin reached 100,000 on a risk-adjusted basis from an ETF standpoint versus gold, it had more than surpassed the valuation of gold. Just the lessons I've learned in commodities. Why do people and a lot of investors not hold gold? Central banks are, because it does have earnings. We're starting to learn that about Bitcoin. Let's look at the facts. 3 months now of outflows from Bitcoin ETFs. They're learning the lessons. They bought leveraged beta, not digital gold, because they're finally getting the lesson of U.S. stock market going down, and this highly speculative crypto space that can lop off a lot of zeros is way overdue to lop off zeros. And they're learning that gold is the one to go, and they're learning that U.S. T-bonds are less secure than they thought, which means gold's more valuable. But here's the key facts that I think I'll push back on Noel a little bit. If and or when we get the normal correction, the S&P 500 dropping a third, that's severe deflation from the inflation, which is a normal lesson of history in the U.S., just following the deflation in China. And to suggest that an autocratic leader in a communist country, his system is going to beat the rest of the capitalism world, I'm like, good luck with that, Noel. We've learned that doesn't work so well.
Yeah, it's not a question of beating. It's a question of who can last the longest before flip-flopping. And my money is definitely on China.
So what does it mean for markets, though? That's what it means for markets. A flip-flopping, what pushes Trump out? Stock market going down. My point is macro markets, you can use that all you want. We can't trade that. I'm trading markets. I'm thinking markets, that means U.S. equities go down. That's the pressure for Trump.
Mike, I think there's more nuance there. Sorry, before you respond, Noel. I don't think it's the stock market going down. I think it's the bond market being unstable.
Well,
Exactly.
It's unstable now, but that's my point. So if the bond market continues to do what it did last week, yield spike, that's bad for everything, particularly U.S. stocks. That's my point. It just makes it's a shorter term thing because U.S. government buys bonds. They always have, if they have to. Now China's buying their own stocks. That's a decent sign. Japan's been buying their own stocks for 20 years. That's what helped them bottom. It's just the way governments work. I'm just pointing out this is the next big trade. The U.S. stock market's so expensive, that's starting to give up the ghost. And unless you expect that to stop, then you're okay being long cryptos. If you expect it to continue, it's very simple, which I do, expect the deflation in the U.S. to kick in. And the number on a 1 to 10 scale, the thing that measures T-bond, that really just T-bond rates in this country is inflation. Supply and all those other things are maybe a 1 or a 2. Right now, we're still in that stagflation stage. The U.S. stock market's fine, particularly versus the rest of the world. It's just starting to roll over. That, to me, is why, like I said when I was trading JGBs, and everybody told me the same thing back then, that they turned out to be wrong. U.S. bond yields just followed that. It just took a little while. This is more global now. And it's, again, a thing that we've never seen in our lifetime. The U.S. is shutting off the rest of the ability to run trade surpluses with them. Just getting started.
And there is one concession I will make. I mean, arguably, nobody in the world wants the U.S. Treasury market to fail. China is the second largest foreign holder of U.S. Treasuries. Japan is the largest. They arguably do not want that market to fail. And so maybe there is some sort of compromise avenue along that. I'm skeptical. I still think this is going to be a stamina game, and I still don't think that the U.S. political system is going to give Trump the win there. But obviously, U.S. markets are much deeper, are much freer, and will have the capacity to bounce much harder. China does have other issues. But another pushback is on the ETF outflows. They are very correlated to the basis trade, not necessarily investor sentiment, but the basis trade. And that right now is unattractive. So a lot of the exits we've been seeing are the hedge funds that are selling that leg of the deal.
Noel, if the Japanese are selling U.S. debt, obviously you said that the largest holder, China, is second. Is that to defend their own currency? I mean, the question is, when people sell, what are they going to buy, right? So I'm assuming that's going straight into yen as a defense of their own currency in this sort of uncertain environment.
Yeah, there is some of that, or even just into the domestic economy in any way. There's two things going on here. One, they could be divesting of some of their U.S. holdings to defend their currency. Another is it could be a leverage chip, a bargaining play. Japan has said, and this was very smart, that they do not plan to use their treasury holdings as part of the tariff negotiations. That was a smart thing to do, because that they're hoping to restore some calm to the market. There have been fears that they would do that. And should they start to sell, well, look out below. It's going to get really messy. I haven't heard any statements from China regarding their holdings. We don't actually even really know how many they are, because much of them are held through proxies. But I presume that this is a chip that they're going to be holding close to the chest.
So I just want to follow up on that a little bit. I just updated my chart on aggregate open interest on the CME Bitcoin futures and the Bitcoin price. That's the same chart syndrome. That's the key thing I need to point out. Bull markets always have massive disparity, particularly new assets like that. You get everybody in doing the ARB. I was quite involved with some of those listening to people who are doing it and made some decent money on it. It's been the focus since futures started and ETF started. That's my point. Now it's in the mainstream and that ARB is mostly over. But why? Because it's all dependent on one thing. Price must go up. That's why I like to say HODL doesn't mean hold on for dear life. It means everybody's in it for long haul as long as the price goes up. I remember using that in 1999 and 2007. It's the same thing. We're just rolling over, and these are just highly speculative digital risk assets, and Bitcoin's the leader. The problem is it does have millions of dependents. Gold only has 3.
You don't have to respond to that one again, Dave.
I'm not going to say it again. I will just say
where we feel on the crypto market versus Bitcoin.
No, I mean, look, meanwhile, globally, when you look at the strength of the Bitcoin network, I mean, yeah, it's backed off from its over 100,000 exahashes or whatever the hell that number's so big, it's hard for my brain to complete whatever. What matters is we're 5 times where it was when Bitcoin hit its previous all-time high. And what matters is Bitcoin mining is seen as strategic, and Bitcoin has been declared a strategic reserve asset in the United States. And there's all sorts of reasons in air cover for many, many things to happen. But when you look at that hash rate chart, it's actually gone parabolic to the point where it can't correct. It is the most obvious fundamental arbitrage in history, literally. And it's one of those things that because you see.
Well, it's a great trade. I just say the great trade's over for now. I'm not saying it's going to fail.
No, it actually looks the hash rate will correct.
It's still correcting. I mean, just.
No, it's not. I mean, well,
okay, well, it's not 100,000.
Scott, pull up the hash. No, pull up the hash.
The price. Okay, you tell me someone who can buy and sell the hash rate and make money on it. It's like talking about GDP. Sorry, you don't buy and trade it. Bitcoin is where the money is. You buy or sell it. That's my point. It's great. I love the hash rate. We all get it. It's been going up. I used that years ago. The point is the price is going down. I think it's going to continue to go down. Hash rate might be an indication to go up, but go ahead, trade that hash rate and see how that works out for you. I'm messing with you, Dave, because you can't trade it. It's just an indication. The bottom line is the price is peaked at 100,000. It's maybe bounced a little bit.
You talk about oil constantly about why is oil going down? It's because people invested in productive capacity. But here's the difference: mining hash rate does not create elasticity of Bitcoin. It literally doesn't. It's because it's a zero-sum game. Right. So it's very, very different. So what you're seeing is either the people who are investing in the Bitcoin network are morons, or they're making rational economic decisions based upon what they understand. And what they understand is that you're wrong.
But most people trading Bitcoin do it to make money, not rational economic decisions. The point is there's a lot of silliness going into space. For instance, Bitcoin miners buying Bitcoin. An oil producer would never buy oil because they know they're doubling down on risk. The thing is, I'm worried about when people tell me that. Oil producer
would never buy oil, but oil is very elastic to oil drillers, and Bitcoin is not elastic to the miners.
But
and
the miners are actually buying Bitcoin.
Why they're doing it is because the capital markets are giving them free money, and they're saying, I can mine and pay at a bare profit for electricity, or I could buy Bitcoin.
They're doubling down, and price must go up. That's called leverage. It's doubling down.
There's no doubt there's some leverage in the system, but leverage.
That's my point. There we go.
I understand that.
And we're deleveraging. That's my point.
Well, it's interesting. If one believes that Bitcoin is becoming a reserve asset, it is dramatically undervalued. That's
based on one human being that we point out. Noel pointed out earlier is facing a lot of litigation. That's my point. Everybody put their hopes in Mr. Trump. That's what's happening right now. Is that we're in deleveraging most markets. Bitcoin, cryptos are part of it, and you're just telling us, your viewers, it's going to stop on a dime. I'm like, good luck.
I'm not saying anything's going to stop on a dime. If anything, I'm thinking it's the opposite. I mean, one could rationally believe that Bitcoin should be substantially higher than it is today, based on having people from both parties. Larry Fink, who's not, no one's going to confuse him with a MAGA Republican. it really matters. I mean, Bitcoin is a very interesting asset. We could talk about this forever. I mean, obviously, this is a macro show, so I don't want to spend my time talking about only why Bitcoin is where it is in its adoption cycle, but Bitcoin, its adoption cycle is actually ahead of many other technology adoption cycles. And in those adoption cycles, you don't see corrections back to 90% very often. It happens, and we've had that happen in Bitcoin. It has already happened at times. The question is, now it's at a very different place in its origin, and we could talk through it. Look, we'll have a whole conference to talk about this in a few weeks. There's all sorts of hyperbolic. I mean, I stood up, I orange pilled like 5 people at a TradFi event last week, and I don't want to go through exactly what I said, but the short answer was, someone said, "What's backing Bitcoin?" And I said, well, the world's strongest computer network isn't backing Bitcoin, but what it enables it to do is be a perfect conduit to convert energy into value. And that has value. And so whenever people say Bitcoin has no utility, they're just missing the fact that there are African villages that have clean water now because they can effectively create power in remote places where that power could be channeled into Bitcoin to supplement the use of the power for things like, purifying water. The same thing is true with renewables and whatever. Every time you treat Bitcoin like it doesn't have that capability, you miss something. Now, with the rest of crypto, there isn't any of that. I mean, there's lots of stuff in the crypto verse that
Doge
looks a lot like NASDAQ.
Cleaning the water in African village. Come on, man.
No, but I mean, but Jeff Dorman from Arco would tell you that there are many crypto assets that have positive cash flows, and that makes sense. And I have quite, been promoted. I think that utility will make a comeback in the back half of this year because there's some value there, but there's also a lot of crap. I mean, I think there's a lot of crap in the cryptoverse. I mean, I think 90% of them are going to go boom.
Just for the record, Arca has to be literally the worst performing fund in the history of crypto. I was in it. They doubled down on Luna, sent a passionate letter about on the way down how they were buying more and going to FTX to get 100% on their treasuries, and they've underperformed because I have left my money in there just so that I can mock them as a principal. But they've literally underperformed even the Galaxy Index that Mike talks about every month in existence since then. So, yeah.
Well, I'm not going to speak to
All
that,
right,
but
trigger.
Jeff, as an individual, is a reasonably smart guy.
He's a smart guy.
He's a
However,
smart guy, and I'm just
as I'm
Noelle,
sure we're
you get
hitting
the final word to wrap this up because you're
Thank you.
somewhere
So
between the debate. Yeah.
As I'm sure we're wrapping up soon, and to bring this back into the macro realm, we've been talking about the short-term decoupling or not decoupling and the narratives and everything. But what happens when markets have to stimulate again? We've already seen announcements from jurisdictions around the world saying that they will be stepping in to help stimulate their economies in response to the hit from tariffs. We're going to see the same from China, probably big scale fairly soon. And it's pretty likely that should Treasury liquidity continue to build, then we will see similar in the United States. So here, which assets will fare well in that scenario, which is eventually going to be inevitable? Obviously, risk assets, the NASDAQ drop will probably reverse, but there's only one asset that is both a risk asset and a longer term store of value. And I'm wondering if when that change comes, that kind of dual nature will end up becoming better understood.
What's this trigger for stimulus? Lower
In the
prices.
US or in the US or elsewhere?
Down.
Lower assets. The stock market going down. And then you get the stimulus. We haven't done that yet.
Yeah,
We're
no, I
going
don't
back up
think the US will not be the first. We're going to see this start to happen elsewhere. And Bitcoin is a global asset. It doesn't really depend on US liquidity quite that much. Sure, US liquidity is the bazooka of all liquidities, and that will only happen when the Treasury market wobbles.
Yeah, I 100% agree with that. And I think that a Fed cut at this point is not particularly impactful if it doesn't come with significant QE.
Yeah, I also don't see a Fed cut this year still, no matter, unless it's because something really bad has happened.
Yeah, I mean, you have Larry Fink out on the roadshow saying maybe they'll hike. A little bit scary right now. So anyone waiting for that Fed cut to save us, it might not do it. Even if
it is worth pointing out the one thing that came out this weekend, which is fascinating and not surprising, is there's a massive pivot away on the Doge front and the budget stuff that where deficits are already increasing. Like our budget deficit this year is bigger than it was the first 6 months of last year. And that is stimulative. no matter how you want to look at it, it is stimulative. That fiscal stimulus that money has to go somewhere, right? That money is being spent, and we'll see how that plays out. That's something we should pull on next week. James will love that topic.
That's interesting. I
That's
didn't
his
know
favorite.
That's a bit crazy and surprising. It's 10:03. We did it. That was a really fast hour. I wish this show was 3 hours long. I could go full Lex Fridman on this one, but
It was
otherwise,
fast.
yeah, it went really fast. Well, thank you all, Noelle. It's always a pleasure to have you. Keep us civilized, as they said. James is pretty civilized too, though. I don't know.
I think you're all very civilized.
Thank you. And Dave, nice shirt. Another McLaren victory this weekend in F1. Otherwise, we'll of course be back next Monday with Macro Monday, and tomorrow I'll be back with the guys from Arch Public at 9 a.m. Eastern Standard Time. And until then, give Mike, Noelle, and Dave a follow. Thank you all, and we'll see you next week.
Thanks, everyone.
Let's go.